said to my dad, wow, I don't want to do this for the rest of my life. Like, how do I retire early? And then eventually I stumbled across systematic trading or technical trading and developed some trading strategies, systems, and tested them on historical data and implemented those. And then that worked. Oh, I've been losing money for the last 5 years. I'm still figuring it out. All right, you're losing money over there. You're struggling. I have something that's actually kind of simple and it works, and I can teach you, in a couple of months, but you're restricting yourself or limiting yourself from doing that because of your definition of self. So yeah, it looks expensive, but the alternative is actually way more expensive. AI is very good at giving you answers, right? But if you ask the wrong questions, then you're not going to get the answers you need.
I'm Garret Wong, and this is the Investing to Win podcast. How do you define success, and what does winning look like for you? Adrian, thanks for coming on the pod today.
Garret, thanks so much for having me. Super excited.
Me too. We're talking in the green room just about differences between, trading and the different asset classes out there. And even though this started out as a real estate podcast, I love having different industries on here. Why don't we start by having you give the audience a little bit about your background?
Sure. So I'm a private stock trader. I trade stock and crypto, and look, for the longest time that was a hobby. I started 25 plus years ago now, and I really started because I didn't want to work in a corporate job forever, and so I mean we'll get into the whole story, but I settled on stocks as my first and primary sort of investment vehicle, if you like, and it took me a few years to figure that out, and I've been trading ever since. In 2012, I quit the corporate world. I was making enough from my trading to trade for a living. So I did that and started teaching a few years after. And the journey into teaching is quite interesting as well, because what you think the goal is not the goal, right? So
I think all businesses are like that. What you start is not what you finish, and you have to fail before you succeed. There's so many great lessons there. So I mean, 2012, like that's 13 years ago. So you're battle tested. What you said, corporate world. What did you do before stocks and crypto?
Yeah, I actually studied engineering. I studied chemical engineering. I was never actually an engineer though. I went into business consulting, so I did strategy and sort of operational improvement work. And so I did that for a number of years. I kind of burnt out a little bit, and then I went into corporate doing standard or more traditional finance roles. So sort of accounting, business planning, strategy in corporate. So I worked primarily in insurance, but a range of things. My last job was sort of head of strategy for a part of an Australian insurance company. So, but nothing to do with trading at all. Trading was always a hobby on the side for me.
How many people do you come across who are successful in business that are doing completely the opposite of what they were trained to do?
Oh, totally.
Chemical engineering. That's interesting. Like, what's you said you never really applied the trade. What made you pivot so quickly?
To be honest, so chemical engineering was a 4-year degree, and partway through year 2, I was kind of bored of the subject matter, but I really liked the mode of thinking that it taught. It's primarily about obviously the engineering side, but it's really about solving problems analytically, and that really appeals to me. So I think those skills that I was learning there were really valuable, and at the time, a lot of the big consulting firms and investment banks were looking for engineers because of the analytical ability. I don't know if that's still the same. I assume it probably would be. And so I went into consulting work because the business side appealed to me more than the banking side, if you like. And so my friends, basically, we split. Some went banking, some went business. So I started working in business consulting, and it was really a perfect fit. It's as a new analyst, it's all about crunching numbers, doing models, analyzing different scenarios, and giving the analytical kind of evidence behind the recommendations that the consulting business was making. And so that just felt right to me. It was fun. I mean, it was not great, not sustainable from a lifestyle perspective. It was a very hard industry to work in, but from an intellectual perspective, it was fantastic.
Yeah. How did you find the consulting world? I've been asked to dip my toe into it. I haven't really, I know there's a lot of money to be made, but how did you find the sort of the day to day, the stability of it, trying to get clients? I don't know what type of consulting you were doing.
Yeah, look, I wasn't independent because I worked for a big consulting firm, so I was an
Oh, I
employee. It was
see. Okay.
I would consider it a corporate job if you like. I mean, I
Sure.
wasn't part of a corporate machine, but they sold the partners sold the projects, and I just worked on and helped deliver them. So from that perspective, it was great. As you move up the chain, then it becomes less about improving businesses and working on businesses, and more about selling, and that was probably less exciting for me. I really like the intellectual challenge rather than the networking and relationship building and sales aspect of it. Uh, so I had some roles at the junior levels and sort of in the middle levels, but I didn't go all the way through to partner, for example, because selling and networking is just not my thing. I guess I'm probably too much of an introvert for that as
Well,
a trader.
engineering
Trading fits
is
me perfectly.
Yeah, engineering is kind of a left brain thing, and then you move into analytics, right? Lots of data, KPIs, metrics. I can totally see that out of an engineer.
Mm.
Um, I love origin stories, and so I mean, just kind of walk me through. You said you're kind of doing it on the side. Like, what? Tell me, you're in a corporate job. You're either happy or not happy, being paid probably very well, and then you've got this little itch. You start on this little side thing. Tell me what that started like.
Well, I guess if I'm completely honest, when I started work full time after graduating, it was I hadn't really thought about what life would be like as a adult. Really, when you go into the first full time role, it's like, oh, this sucks up everything. And I said to my dad, wow, I don't want to do this for the rest of my life. Like, how do I retire early? And of course, I'm early 20s. He laughed at me and then said, well, if you want to retire early, you've got to learn to invest and make your money work for you. And so we talked about a range of different investment kind of vehicles, if you like. He even bought me a broad investment course that studied a bit about property, a bit about stocks, a bit about precious metals, all of these things. And so I did that, and I didn't have a lot of capital. And in Australia, investing in property is pretty capital intensive, I guess, unless you're very creative. Um, I didn't really want to run a small business at the time. I had no experience or background in that. And so I sort of fell into stocks. And I started just investing. I bought some companies that the broker recommended, and that kind of didn't work. And then I started following some guru newsletters, and I invested in stocks that they recommended, and that kind of didn't work. And then I read a book, One Up on Wall Street, Peter Lynch, which is a great book. And I tried to apply his strategies, and I was always a bit slow, and I getting in too late, so that didn't really work. And then eventually, I stumbled across systematic trading or technical trading, and developed some trading strategies, systems, and tested them on historical data and implemented those, and then that worked. And so that's been my approach ever since. And there's a whole lot in there. I mean, hundreds of books to kind of figure out my style and find systematic trading and figure out what that is and figure out how to test my ideas. But eventually, when I launched my first strategy, started making money, and so I've been really doing that ever since.
Okay, that's a great segue then. Why don't you? So there's so many different avenues of trading, and I've had some traders on here. What is your particular strategy that you're doing? Like, did you say it's day trading? Is it options? Like, what exactly are you doing?
Yeah, so I trade stocks. So I don't trade options. I trade stocks long and short. So I can make money when the market goes up. I can make money when the market goes down. The key thing is there's lots of different ways to make the decision. So my style is purely systematic or mechanical system trading. What that means is I have absolute rules that tell me when to get in and absolute rules that tell me when to get out. If A and B and C are true, you buy. If D or E is true, you sell. And the rules are purely technical, so based on price movements. A real simple example might be if today's price is the highest it's been in the last 200 days, then you might buy because it's going up. And if something's going up, it's likely to keep going up. And then if the price drops by 25% from a high, then it's probably not going up anymore. It's started to go down, so you get out. And the idea is you buy something that's going up, you hold it while it keeps going up, and then when it turns around and starts going down, you sell and you try and make the money in the middle. So it's longer term than day trading. My hold period can be from anywhere from a couple of days to many months, but it's purely, algorithmic, systematic, however you want to describe it. And that, having rules like that takes the emotion out. It makes it easy to test, so you can look at the past data and say, hey, this is my strategy, did it work? Or if I tweak it, did it work better, did it work worse? So you can test your ideas and refine and optimize, and then combine multiple different ideas together into a portfolio.
Okay. No, I've like again, I've had some stock traders here, and they talk about these systems like that. How do you? I mean, does it apply to every? I'm not going to say every single type of asset class that you're delving into, or different companies, but is there a particular type that your formulas apply to better of a different? I don't know what the technical word is. I think of companies, but probably just portfolios, I guess.
Yeah, look, different markets behave differently. Different sectors can behave differently, and different stocks can behave differently. So you can sort of choose the level at which you design the strategy. Pardon me. So, for example, I trade stocks in Australia, US, Hong Kong, and Canada, and I also trade crypto. And so each of those behave just a little differently. The Hong Kong market, especially, behaves quite differently to the Australian and US and Canadian markets. So what works in Hong Kong sort of works in those other markets, but not as well as it does over here. And what works in the US may not work as well in Australia. So what I do is I choose the universe of instruments that I'm going to trade with a strategy, and develop the strategy around those behaviors. It's just like if you're investing in real estate, you might take into account different things in the US real estate market versus the Australian real estate market, because there's some different rules, there's different drivers, there's different players, different yields, all of those things. So, yeah, you choose the universe, you design the strategy based on the behavior of that universe, and then you implement it after testing and making sure that it's solid. And what I have is a portfolio of multiple different strategies. So, let's say more than 30 strategies across the whole portfolio, trading different types of rules, different universes of instruments, so that I get diversification in there.
Wow. Okay. Way over my head because I'm a real estate guy. But no, I think from what if I were, I don't trade in stocks, which is why I find these conversations so fascinating. Because to me, real estate is, I'm going to say it at the time of this recording, it's dead right now. And I don't anticipate it recovering unless you're going to be very lucky, in some kind of market where you can flip something. Like it's super expensive. The rents aren't catching up. And it's such a long-term play that you're hardly ever going to get your capital partner's money out. It just doesn't make sense. How have you found with your clients? Are you getting a lot of people from real estate that are, because a lot of a lot of people in stocks I find don't go into real estate. It's kind of, there's this big dividing line. What have you seen?
Look, there is a big dividing line, and it's really interesting because people will say, I'm a stocks guy or I'm a real estate guy. And I often wonder why we, as humans, cling to a definition of self that's limiting.
Yeah.
It's at multiple levels as well. So I'll have conversations with traders, like people who are struggling to learn to trade. They want to be a trader, and they'll tell me, "Oh, I'm a forex day trader." I'm like, "Oh, okay, that's interesting. How are you going with that?" "Oh, I've been losing money for the last 5 years. I'm still figuring it out." And so, okay, so tell me more, and I'll dig into it, and then I'll sort of explain what I do, and I'll say, "Oh, that sounds really interesting, but I'm a forex day trader." Like, all right, you're losing money over there, or you're struggling. I have something that's actually kind of simple and it works, and I can teach you, and I can teach you in a couple of months, but you're restricting yourself or limiting yourself from doing that because of your definition of self. And I think that's really unfortunate. I mean, I'm a trader, yes, but I also have real estate, and I also have precious metals, and I have have a small medium business, and
There's
you know,
diversify, right? I mean,
yeah. I mean,
that's the name of the
why
game.
not? Yeah, why not do all of those things? Um, However, you're right. I, a lot of real estate investors don't come across and do stocks. It's a very different way of thinking, and you've got to learn new skills. And I guess sometimes it's like, well, how much can I learn? Is probably the, can I really do? I don't have the time. I'm busy. Got all more real
Yeah,
estate deals going on.
those are
So
all excuses, right?
yeah, yeah. I mean, everything is learnable if it's important enough to us.
Well, I think that's what it is. And to me, I might not be popular saying this, but I mean, I think I've earned the right after 28 years in real estate to say that to a certain extent, real estate is, you have to be lucky, right? And it's not very sophisticated. Sure, you have to know what you're doing, but in the proper market, in the proper year, I don't want to say any idiot can go out, but like literally, you can find a property low, you know, put your sweat equity into it, maybe learn how to swing a hammer and watch a YouTube painting show, and make 20 or 30 grand, right? And then you've got all these Instagram billionaires that are also pushing this, these content creators, how sexy real estate is, and even buying a rental property. Okay, fine. You buy a rental property, it's going up by 10, 20% per year. You happen to be lucky that you put a tenant in place that doesn't trash it. How much knowledge do you really truly need? And then you've got the ego behind it to say, oh, I now have an asset that's 500,000, $1 million. I hold on to it for 20 years. Now I'm a millionaire, versus the sophistication that you need to do what you're doing. And I think that's maybe the dividing line. And maybe people in real estate who've had a little bit of luck aren't willing to put in, you know, the blood, sweat, and tears that it takes to have the knowledge and confidence to not lose your shirt. Would you agree with that?
I think largely that's probably fair. It's a different profile of activity as well. So, um, I mean, I don't day trade. Day trading means intraday buying and selling, buying
Yes.
between the open and the close, right? I'm longer term than that. So I'll hold overnight and so on. But it's still fairly active to manage it. Even with my trading, my own trading is fully automated. The computer does it all, but I still have to monitor it. It's not like I can go for weeks on end without looking at it. Whereas I guess in a real estate deal, if it's a long term deal, once it's set up or the tenant's in place or whatever, it could be. Yeah, there's property management to be done, but it's not like you have to make 10 buys and sells this week, which you might do
Right.
in trading. So it could also be that it's just a very different sort of style and mindset, and people either can't see themselves doing that or aren't willing to make that leap. Um, one of the things that I learned early on is the strategy you trade with needs to fit your personality, needs to fit your objectives, needs to fit your lifestyle. So three things. If you don't get those right, it's very hard to follow the strategy consistently over time, and you end up, second guessing the strategy, ruining it, pulling the pin early, or basically mucking it up. And I think a lot of people look at the markets, the financial markets, and say, "Oh, I don't want to be a day trader," and I don't want to be a day trader either. But I'm still a trader. So what many people miss is that there's many ways to be a trader. And you can have systems that buy and sell many times during the day. You can have a system that buys near the open and sells near the close. You can have a system that buys and then sells several days later, or you can have a system that buys and sells several months later. And you can also have strategies that are you have to do something once a day. Maybe you have to do something once a week, or maybe you have to do something once a month. And if you figure out who you are, your personality, your objectives, your lifestyle, and then find a strategy to match, then it becomes much easier to start trading. And most people are trying to push a method rather than trying to show traders and investors how to find their method. And so I
I,
prefer that. So I think that opens it up a little bit if you're willing to look.
yeah, I'm nodding my head here for those who aren't on YouTube here on Spotify or Apple. I'm agreeing with you, Adrian. I find it that, and we'll talk about mentorship in a second because I'm very passionate about collapsing time through coaching and mentorship. But something that I see this every day, right? Like we've had a very large property management company that we have, and we have clients coming in all the time. And I find the best success is when I take half an hour, 45 minutes, because the client, they've seen us, they've seen me on social, they know the prices, they think they know what they want. And they're
Mm,
like, okay, I want your full property management package of XYZ dollars. And here's my property. How quickly can we get started? And I have to slow them down. And we call it triage, actually, because the patient doesn't know what medicine they need, right? We don't know what product they need. And we
mm,
actually, as a company, take the time to really, what are your long term goals? What type of personality you have, to your point, and what do you want out of this property? Because some people literally are, well, I have this property, it was left to me by my grandmother's estate, and I don't want to get rid of it yet because who knows what's going to happen. We've got grandkids, so we just want somebody to manage it. And then there's others who are like, I have one property, it was my first house, I'm living in my forever house right now, and it's doing really well, but I'd like to become a professional real estate investor. Okay, and I might say to them then, you don't want my services, but I can teach you how to be a landlord because this is what you need, right? So I love what you're saying there, because I think personality is everything when you're trying to match what you're going to be doing as an investor.
yeah, and I think coming into a new field, we as humans, we have preconceived ideas based on whatever past influences, family, what our parents did, and so on, and that limits our ability to see what's possible. And sometimes it does take someone to open up your eyes and say, look, you can go this way, you can go that way, you can go that way. They're all good strategies, but you've got to find the right strategy for you. And many people will not get started in something simply because their preconceived idea is that doesn't work, or that is where you lose your money, or that is risky, or that's this because someone else in the family got burned. And I've seen examples of that in our family as well. And we need to open up our kind of field of vision, if you like, and see that our past experience is not all that's actually possible.
Well, I think knowledge is more than just power. Knowledge is also comfort, right? And
Mm,
confidence. It's very interesting. You talk about family and what you're used to and bad experiences. So, I mean, obviously, I come from a real estate family. My dad started with a couple of C-class duplexes that he turned around to buy my family's Chinese restaurant building because the landlord was about to evict us by trying to increase the rent. It was like sort of a hostile takeover thing. And that was the primer for me to quit my you were in chemical engineering, I was in molecular biology, and that was my pivot point. And so then my mother had an apartment block after my dad passed away. She traded in the restaurant. I managed to broker this really good 22 unit apartment block, and it's a well that keeps on giving. Obviously, I've got 28 years in this, and yet my sister in Toronto, who now has a condo, and I'm trying to encourage her, hey, you need to do the real estate thing, you've got extra whatever, has always resisted me, and I couldn't understand why. And all of a sudden she tells me, she was just here a couple of days ago, that she's getting into trading. And so it's quite interesting, because while she's afraid of real estate, probably because she has friends that in her circle that have had losses, and yet in her analytical mind, and she's a researcher, right, she loves researching, she's comfortable trading. you
mm.
know it's not day trading, I think it's longer medium type stuff that you're doing, and she's dabbling at this point. But it's just interesting that she's choosing what I would view as something more risky when I'm just completely comfortable in real estate, right? And she's got her older brother who can basically manage it, find it, renovate it. Like it's quite a head scratcher.
It can be baffling, but look, we all come from our own experience, right? And we
Yep,
have
yep.
our own conditioning and our own perceptions molded by the reality that we've experienced. And yeah, we can have very different experiences and therefore very different judgments. So, I mean, I think that's probably a good thing,
Yeah, no,
because
for
we can
sure.
all find our niche. But
Yeah.
it's also a good thing because we all have opportunity to kind of grow past those limiting beliefs and past that past conditioning.
Yeah. So let's I hinted at it a few minutes ago. So we talked in the green room. I have a business coach who you've heard of, and that's kind of, I spent 27, 28 years in real estate just knocking my head against the wall. And yes, I'm successful in real estate, but I also wonder, I never went to a mentor, right? I think I went to one, I don't even know who it was. One of those 2 day weekend, 2 days on a weekend type intro to real estate thing. And then it's the first exposure I ever had to anything like that. I think it was like $49. But of course, at the end, there's this big push and hard sales and buy our systems. And it completely turned me off at a point where I was probably very vulnerable to that. So I basically, you know, bought 43 properties on my own over the next 10 years, which is great while working full time, but I didn't have a mentor.
Mm.
And I made every mistake there is. And had I found a mentor strategically in year 1, 2, or 3, I might have gone into multifamily sooner, and I would have done some JV partnering and set up different things that, after a decade, you see people with $50 million portfolios. I wasn't anywhere near that. I had the C-class portfolio that was all with my own money. I didn't use partners. Where do you feel? Where are you with the mentorship aspect of just learning and just learning from other people's mistakes and not
Mm.
to not do those mistakes?
Look, I mean, I'm 100% with you. I didn't have a solid mentor at the beginning. I did a lot of research and learning myself. I wasted 3 years bouncing around between strategies, trying things out, making mistakes before I found something that was actually profitable. And then I found the approach that worked and implemented it, and then built on that and grew. But even then, it was working, but it was slow, and I was too slow to make other moves, right? I was too slow to diversify. I was too slow to learn to make money when the market was falling. I was too slow to diversify internationally. I was too slow to do a whole lot of things now in hindsight. And after doing it for, well more than 20 years, what I've realized is that if I get someone new who's open to learning, I can get them there in just a matter of months. Whereas they could struggle for 3, 5, 10 years and still not get there. They'll get there eventually if they really want it, but why waste the time? And so mentoring often looks expensive because someone's gone through the pain and heartache of getting all of that experience, and then to share it also takes a lot of effort and time. So it looks expensive to the beginner, but what we don't often see as the beginner is what the potential outcome is if we can accelerate. And the potential through compounding is astronomically different if you can save a few years or many years. I've had people come to me finally looking for help after struggling for 10, 20 years or more. I've been trading for 20 years. I still haven't figured it out. I just want to figure it out. Okay, fine. I can help you, but I wish you'd come earlier, because future self, if you think, okay, if I could save a few years and compound longer, future self ends up being much more wealthy than they would otherwise. So yeah, it looks expensive, but the alternative is actually way more expensive. Slow, painful mistakes and learning yourself is more expensive when you think about long-term wealth.
Well, I'm glad you said mistakes, because you were just talking about the compounding effect. I mean, somebody loses their shirt 30, 40, $50,000. And I mean, it can happen in a blink of an instant.
Mm.
I mean, that's way more than a lot of the programs out there, right?
Oh
And,
yeah, absolutely.
I mean, it pales in comparison. Like, you even think about real estate. And I think it's human nature. Like, if I had found a real estate mentor, and let's say I went into a mastermind for $10,000, right? But instead, I decided to go it alone, and I bought a property, and I didn't have the due diligence, and there was some kind of cracked foundation or whatever, and I have a $30,000 bill. Now, the $10,000 mentor, who could not only teach you how to properly inspect a property, hire a proper home inspector, that seems like a bargain. And yet, we as humans, I don't know, we just shy away from that sticker shock. Like, it just blows my mind. But again, that's me looking behind me, wishing that I would have paid for the mentorship.
Yes, look, I completely agree. But we only know the value of that once we've made a few mistakes. I mean, I've made mistakes that have cost me, many hundreds of thousands of dollars in
Yeah.
hindsight. The mistake didn't cost that much in the moment, but the lost compounding effect was huge, huge.
Yeah.
And again, now I only now know that in retrospect. But when you don't have the experience looking forward and projecting the value of those mistakes or the impact of those mistakes and comparing it to the current real cash outlay of buying something right now to get help, it's very hard to make that comparison. So I think, to be fair, like, it is, it can be scary to kind of shell out for support for mentoring. And plus, then you've got the question of, well, is this mentor actually any good? And so we've got to, find a way to build trust in ourselves and in them that we can actually make that investment. And that can be challenging as well, because I know in my industry, there's a lot of people that I wouldn't pay. They just don't have the knowledge. They don't teach well. Or they just outright scams. And that can be concerning as well as an individual. So, doing some research and trusting yourself to actually get to the bottom of, is this real? Do they know what they're talking about? Is a big part of it.
Yeah, that's a great point to kind of pivot, because I want to know. You told me about the system, or that it's automated to a large extent. Walk the audience through what your is it a program? Is it mentoring? Is it a system? Like, what are you offering people?
So when I teach, it's a combination of things, all of those things. So in order to trade well, you need a portfolio of strategies that work. A strategy is a set of rules, so you need those rules, but you also need to have confidence in those rules. So what I teach is I have a course, or a series of courses, that teaches all of the different aspects of trading, from beginner all the way through to advanced. And that's an online course. But there's always a lot of questions, and there's always a lot of sort of individual concerns. So there needs to be support on top of that. So we have the course, we have the strategies. So when you join the program, you get more than 20 different trading strategies that you can use. They're all fully disclosed rules, and the course teaches you how to test those, how to evaluate them, how to build confidence in them. And then we have the mentoring that overlays on top of it, which is all about guiding you through, keeping you on track, stopping you getting distracted from the shiny lights, checking your analysis, making sure you did it right, looking over your shoulder when you implement, to monitor and make sure that you're doing the right things. When all of the little voices come up that are about insecure or fear or greed, digging into those and helping them let them go. It's a lot of, there's always technical knowledge. You've got to learn some stuff, but then there's some practical things that happen. You go, whoa, and your mind starts going crazy with fears and greed and all that. So you got to deal with those day-to-day things as well. And that's where having someone beside you really, really helps. So uh, we have all of that bundled up into a 6-month mentoring program, which is usually enough to get people up and running and automated and trading with confidence. And then ongoing, we have a community where people are all doing the same thing and all growing together. And that's still a mentoring sort of environment as well, because myself and my coaches are leading and guiding that.
Yeah, I also have a community for, again, ongoing property management when somebody has a property, because like I said, it's kind of easy to stumble into a property. It's the day to day turning it into a scalable operation, those types of things. Um, I love the concept of community. So, I mean, somebody who is listening to this Investing to Win podcast, I mean, obviously they can feel how credible you are, engineer, kind of went through all these things, been doing it for 20 years. So that would give them confidence. But when somebody is Googling, right, and they happen to find what appears to be a good mentor, or they just find somebody on Instagram and maybe they don't know that you can buy likes and follows, how does somebody, like, there's a lot of noise out there, Adrian. How do you find that people can find you? How do you find that they can research about you in particular and say, okay, this is the guy I can see, I can trust, I can feel it? Like, what does somebody do when they're in the research?
I guess it's the same as every investing space. They're all noisy, and I guess what I would look for is consistency of showing up. Like in the last couple of years, there's been so many, Instagram mentors, like you said, so many kind of YouTube gurus. But if they've been around for 5 minutes, they probably don't have the breadth of experience you need. And so you really want someone who's been trading particularly for decades, because market cycles take a while to play out. And there's not many people who are teaching now who were trading when the bubble, the tech bubble burst, or who were trading when the financial crisis happened in 2008. And you sort of need that perspective in order to influence and kind of mentor correctly, so that the student will survive long term. So first of all, I think you're looking for longevity, and then you're looking for someone who will actually talk about the things that really matter. Unfortunately, a lot of the instant gurus on YouTube and fake gurus on Instagram or whatever, they focus mostly on making money. Like, look at this trade I made, and look at this trade I made, and you can do this, and you look at my trade call from last week, and um, they're very flashy about the quick money they're making, but there's no quick money. I mean, sometimes you can get lucky and have a good trade, yeah, of course. Just like in real estate, you can get lucky and get a good house or get a good tenant or whatever. But to do it over and over and over again, it's not so much about making money on that one thing. It's about, what do you do to protect the downside? What are your systems and processes, and what are your rules, and how do you allocate your money? And there's a whole bunch more kind of boring stuff that is really, really important, rather than, look at this trade I made, and look which coin is going to the moon, and all this sort of crap that people talk about. So I would be looking for someone who has a much longer breadth of experience, who talks about more than just how they made money on one particular stock or one particular trade, and they kind of go more holistically. Yeah. And when you start looking for that sort of thing, I will show up, for example.
Yeah, no, I was going to ask, the audience can see I'm writing on questions here as they're coming up. You know, to me, if I'm looking at somebody in a completely different field that I know nothing about, I would want to know that how they would navigate through a downturn, right?
Mm.
I mean, there's different cycles. And I mean, look in real estate, right? Like if I'm going to be mentoring something in real estate, or I wanted to look at a real estate mentor, I would like to know how they, and if they were even a part of the, 2007, 2008, quote unquote crash, right?
Mhm.
How did they mentor through that? How did they get through it? Did they have properties? In the last few years, this year is a very, very, good indication of that, what was happening in the beginning of the year with the election and the stocks and now with tariffs and everything. Would you agree that a good stock trading mentor has had to be battle tested through those? I mean, how do you navigate? Let's ask you that, Adrian. How does one navigate through that with your system?
Well, I mean, to answer the other question, I would say absolutely. You need to have navigated that in order to guide someone, because mentoring is about showing someone the path that you've been on, and allowing them to accelerate by benefiting from your experience. And someone who's been trading for 5 minutes doesn't have that experience. They might have read it in a book, but that's very different than actually being there. And so I think it's critical. And how does, the other question is, how does my approach navigate downturns? Well, there's different strategies to make money in different market conditions. And so there's one set of rules, or there's many sets of rules, but you might have one set of rules to make money when the market is going up strongly. You might have another set of rules to make money when the market is going up but is quite volatile. You might have another set of rules for sideways markets, and a completely different set of rules for declining markets. And each of those brings with it its own challenges, both psychological and practical. And so, combining those different types of strategies together and allocating your capital so that you've got some capital left over available for when the market turns is, starts to be very important.
Yeah, one of the things I wanted to ask, your opinion. Like, I'm pivoting a little bit. Hopefully, I'm not throwing you too much of a curveball. But AI, okay. I mean, with the emergence of AI, I mean, it's changing on a monthly, weekly basis, and it's getting better and better. And there's all these things. Have you seen AI creep into your industry?
Oh, of course. Yeah. I mean, it's going to transform things dramatically. And it's tempting to think that, oh, AI is going to fix all my problems, or AI is going to tell me the answer and I'll be able to get rich tomorrow, or we have a lot of hopes about, hopes and greed going on about AI at the moment. The challenge is you need to, at the moment anyway, you need to know what questions to ask. AI is very good at giving you answers, right? But if you ask the wrong questions, then you're not going to get the answers you need. You get the answers you asked for, but not the ones you need.
Yeah.
And I think that's another aspect of mentoring, right? Uh, if you have a mentor who's got the perspective and got the experience going through the different cycles and um, good times and bad times, they're going to tell you you're asking the wrong question. But I haven't yet had ChatGPT tell me you're asking the wrong question.
Oh,
It
it
just
agrees with you, right?
Yeah.
And
It's
never
like,
mind
oh,
the
that's a really
hallucination.
great question.
Yeah.
Let me give you all of this knowledge. It's like, okay, but I happen to know that it wasn't a good question because I've been
Yeah.
doing this for a while.
Yeah.
So that I think people have to be careful of that, because it can lead you down a path which isn't actually valuable. Um, it won't. I suspect it won't always be that way, and I'm sure that someone will come up with an approach to AI to make it more of a mentoring kind of relationship. And in fact, it's a brilliant idea. I really like that. But right now, most people aren't using it that way. It's also good at giving you different strategy suggestions, but it's only as good as its training material. And
Well, I
so,
mean, garbage in, garbage out. And who knows? It could be somebody who wrote a course with tons of spelling mistakes that just trying to rip people off. And now that's the source material. I mean, you need to
well, I
verify.
mean, there's a whole lot of Reddit threads that are used to train AI, and man, there's some garbage on there, right?
Yeah.
And so, yes, you can get some quick answers. Yes, it's a useful tool for research, but I don't think at this point it's good enough to be a sole learning resource for someone who's new. You still need a broader perspective. You still need to know if you're asking the right questions. It can be used in trading in many ways. You can use it to come up with strategy ideas. You can use it to refine your hypotheses. You can use it to draw on the knowledge and insights of other experts who have come before, that are in the training material. Um, but I think as a new trader, it would be very hard to learn to be successful just by talking to AI at this point.
I mean, I'm going to ask the question straight out. Do you ever envision that AI could be used to pick well performing stocks? Because that's
Oh,
what
absolutely.
people, I mean, that's, that's the quick and easy, right? That's the lazy way.
Yeah. Look, I think I think it is possible, and it's going to be possible. But again, it's going to be based on the models and the inputs and the parameters that are given to it. It's You can have the best strategy in the world, even the non AI strategy. You can have the best strategy in the world, but if you risk too much on each trade that you make, you can still blow up.
Yeah.
So it's not just about picking the right stock or picking the right crypto token or picking the right house. It's about how do you execute that. And so we do need to be careful as traders, especially, to make sure that we think about money management and we manage our risk properly and we do all of that to meet our objectives. Because even if you've got a really great strategy, those other things can ruin it for you. And so, yeah, AI is going to help, and yeah, it can pick stocks, and it can. There are many AI models already, I would say, that work and can be profitable. But we've got to be careful to not just do that and get hyper aggressive. We have to wrap proper trading discipline around it.
Yeah, that is a great, great quote, and probably a really good place to start to wrap up here. We've talked so much over the last hour about mentoring and different things like that. But I love to cap off every episode with a question I ask every guest because it's always going to be different. And I'm really curious to see what you have to say. So, this is the Investing to Win podcast. How do you define success and what does winning look like for you?
So yeah, good question. Um, in life, I would say success means living the life that you want in the manner in which you want it, with the people, doing the things you want to do with the people you want to do it with, um, and feeling good about that. But more on a more micro scale, in trading, success is about meeting your objectives long term. And um, how do we sort of define that? Well, that's going to be different for every person, and this is where a lot of people come unstuck. If someone tries to trade to my objectives, but they have completely different risk profile, it's not going to work. So I think having clear objectives and then having strategies and a portfolio strategies designed to achieve that you have absolute confidence in, that's what gets you there. And so getting clear on those objectives, what is it you actually want to achieve, and then form a strategy or a series of strategies to get you there and learn how to implement them, do that consistently, that will help you achieve the goals that you actually they actually want.
Yeah, well said. No, I think me personally, I agree with you that success is really about your perspective. And for me, it's the same as you, just being able to have, free. Everybody talks about freedom, but freedom to be able to do the things that we want to do with who we want to. And, I don't believe in retiring, even though I'm 54. Who knows what it's going to look like in 15 years, but having fun, right? Having fun and being with those you care about. So that's real winning. So,
Nice. And that's not necessarily about having huge amounts of money. It might be, depends on lifestyle you
no,
want, but you know, actually waking up and being happy to be alive, enjoying your day and enjoying and doing that consistently, and having the right people around. All of the investing, all of the money is just a vehicle to help enable that.
yeah.
So you can find joy in the small things. You can also find joy in big expensive things. You know.
Yeah, to each their own. Well, no, it's been great, Adrian. Thanks for coming on the podcast. I'll put all of your information and about your methods and your how people can get in touch with you in the show notes, obviously. And yeah, I know that you're in Australia. It's morning for you. We're just wrapping up here. So yeah, have a great day, and we'll catch you next time.
Thanks so much for having me. Appreciate your time, Garrett.
All right, take care.